Good morning, everyone. How's it going? It is 6 a.m., so half an hour before the open on November 22nd, the day before Thanksgiving. So most likely we're not going to see a lot of activity, but we could see some directionality, some volatility simply because markets are thin. But generally, it's a very quiet day right before Thanksgiving, and then Friday is even more quiet. So we've got a question here. Does support and demand play any role, or does RSI get the job done? That's a great question. The answer is I was going to say on a shorter time frame, but actually the truth is no matter what time frame you're looking at, supply and demand is absolutely fundamental. I was going to say on a shorter time frame that's more important, but the truth is on a shorter time frame you have fewer tools that are accurate, but supply and demand will still apply. So it becomes kind of like you can kind of think of it as a more important tool when you are looking at a shorter time frame simply because you don't have a lot of other things to rely on or to look at. But supply and demand is always relevant. And how do you figure out supply and demand? Supply and demand is mostly shown by two things. Either you have an area of consolidation, which means there's been a lot of activity. So let's zoom out a little bit on the S&P 500, and I'll show you what I mean. So over here, let's get rid of some of these lines. Okay, that's a little bit better. We can probably get rid of this line now. So if I take, for example, this horizontal line right here, what I see is that there's transactions here, there's transactions here, there's transactions here, right here, right here, right here, right here, right here, a bunch right here. What that tells me is that there was a lot of supply and demand happening right here because there was transactions. People wanted to sell and people wanted to buy. And if we went through, that means the people who wanted to buy, they had greater demand because even when everyone who's willing to sell at this price was done selling, the buyers kept on buying. And that's why these prices went up, because now we found someone who wasn't willing to sell down here, but was willing to sell up here. So that means the demand was stronger at this point. And then what happened when we came back, demand was still there. And when we came back, demand was still there. And when we came back, actually now there's more supply here. There's supply, there's supply, there's supply. There is now right here, there's demand. So supply and demand will dictate, that is actually the most fundamental measure. There's nothing even more lower level than supply and demand. It's always going to be relevant inside of the market. So we just need ways of gauging, is supply more or is demand more? And generally we see by the previous actions and then breakouts of old supplies and old demands. The reason why we tend to react to the same levels is because people have memories. And just all these guys who sold, they said, hey, I'm willing to sell here, I'm willing to sell here, I'm willing to sell here. And then they saw the demand was actually much higher and it started to go up to here. Well, when they get back down to here, they have that memory and they go, oh, well, maybe it's going to bounce back up. Maybe I should buy here also. Or the people who bought over here and saw it go up and come all the way back down, they're like, shoot, I held this for all this time and I made zero money. I might as well get out before it goes even further down. So people have memories and they have these anchor points of when they bought and when they sold, and they will react to those same prices. in the future. And that's why we get these supplies and demands. The other way of determining supply and demand, so for example, right here is this very sharp turnaround point associated with a lot of volume. This is hard to, this was COVID. So it's harder to see because the volumes are ginormous during COVID, and there was a lot of emotion, there was a lot of fear. But so for example, right here we hit a low and there's no real, well, actually, I guess over here you could have seen some supply or demand over here. But in any case, right here, you also saw this huge uptick in volume in this very tight region of prices. So if I take price times volume, and that is an extreme, then what we'll see is that those are supply and demand points as well. So if I go over here, there's a huge amount of volume right here. And this is not quite the peak, but it is very close to the peak of where we started to go into a short-term downtrend. And then when we go over here, so we're not quite exactly at the bottom, we do see accumulation of volume right here, but it's not a little bit later and not too much higher of a price. We also see this region of high volume associated with this pullback right here. And then you can see that that was really where we start to see we broke the trend and we flipped over to a bull market. So this was basically the inflection point right here, and then a confirmation right here. So these two areas of volume. So here we really broke out of this blue flat region, which was the one I just picked as an area of supply and demand. And once we broke that, that's when we started to surge upwards. So supply and demand will always be relevant. You can draw on a minute chart, a 5-minute chart, an hour chart, weekly chart. You can draw it on every single chart. You can see where people have reacted to prices in the past. So very good question. I would be looking at supply and demand no matter what. Okay. So let's take a look at futures. Futures are up, actually not random, at least not in the S&P and NASDAQ. NASDAQ is up about almost half a 50 basis points, half a percentage. And then the S&P is up about a third. So this is not random. There's definitely a positive bias in the market. So the most likely culprit is NVIDIA. So let's take a look at what happened with NVIDIA. And so with the announcement, we had a huge downward reaction, but a very quick recovery. But in the post-market, we were trending downwards. And then in the pre-market right here, we went way up, and we're actually not that different. We're only about, what is this? 500.79, and we closed at 500, so 79 cents up on NVIDIA when they're projecting a plus or minus $30 or $36 range. This is nothing. So that's really, so basically NVIDIA's earnings are kind of meaningless. They didn't shock the market, didn't make the market super happy or super sad. So they're flat, and anyone who bought options playing their earnings, they got creamed because they could not have made money, at least on the shorter data options, unless NVIDIA had gone up $36 or down $36 or more. So option sellers were definitely the winners right here for NVIDIA. So it looks like NVIDIA does not explain the exuberance in the market. So we also had that Fed minutes, and we see that treasuries continue to go up. I don't think it's related to the Fed either. So really, it looks like natural movement of the TLT of bonds. What is going on here? So we broke out of that flat top region that we drew over here earlier. So I guess I should make that a little bit higher. So it looks like we are moving up out of this ascending triangle that we had. If we count today's open, that would be a little bit higher. It's this orange dotted line that's hard to see right here. So we are moving upwards in rates. And the guys who called me were right. They're like, looks like, interest rates are coming down still. Bonds are going to go up. But of course, I was talking about the Fed and not just interest rates, period. So interest rates do look like they are still headed upwards. That's relief of pressure in the stock market. And with thin volume in the stock market this week, that is creating a upward bias, excuse me, an upward bias in the markets. So if I look at the SPY, we've got very, very low volume. You see that even last week we had low volume, but this week, even lower volume. This is the smallest bar we've seen, very similar to this bar, but it's still smaller, the smallest bar we've seen in months. So it's easy for a market to react or to look like it's reacting on a very small news. So I'll count that mostly as sideways movement for now, unless we get a strong directional movement in the markets in the morning. So the first half hour we'll be watching. The first hour, if there is a breakout to the upside, then we might change our opinion. But for now, it's looking like it's still probably sideways movement. Again, we're not expecting a huge directional movement or huge directional change during the holiday week. Next week might be a different story, and we'll see. But this is getting a very long in tooth, this 2 almost 3 week rally now. And the entire last week this week, we've been hugging that +3 Keltner channel. And we're starting to see some breakdown in the RSIs. So we'll see. We'll see how much longer this can last. But it does feel like a pullback has to happen sometime in the next week to week and a half. For today in day trading, I don't know that I would day trade this week at all. Actually, there is money to be made, but you're going to be working for it and you're going to be waiting quite some time. So if you don't have the patience, it might be better to just sit it out. And for some reason, I am losing my voice, so I'm not going to talk much longer. We'll just get ready for the market to start. It's probably going to be a very quiet day, and just position yourself. Remember, it's pretty much a long weekend. It's pretty much a 5-day or a 4-day weekend rather than a 3-day weekend, where we got Thursday, Friday is a half day in the markets, and there's going to be very, very, very little trading, even less volume than yesterday or today. So just make sure you position yourself, be aware that you're getting time decay over that entire time with very little directional movement or zero directional movement over all that time. So you just want to be sure that any of your options that are less than 30 days, those options are going to experience time decay quite rapidly. And so if you're short them, if you've sold them, that's fine. That is actually in your favor. But if you are long any options that don't have that many days left and they're not hedged, I would suggest that you hedge them or you roll them to get more time, so time decay doesn't hurt you so badly. All right, so that's it for this morning. I'm really starting to lose my voice, so hopefully I'll be okay in the afternoon, and I'll see you